Hey traders, SniperTrader here. It is Sunday, May the 12th, 2024. And today I have a easy, simple strategy that I want to go over at the beginning of my trading for beginners. All you really need on your chart is right here. A 9 EMA. On my chart, it is cyan in color, this bluish color. A 20 EMA, which is on my chart, is yellow. And VWAP, volume weighted average price, which is green on my chart. So what you do is you enter when you get a candle close above, well, theoretically you want to be above all three lines, a closing candle above. This is a 1 minute chart that I'm using on this example. So you enter there, and then you would actually want to exit if you get a close below either the 9 or the 20. Normally, if you get a close below the 20, you are closing below both. And for a long entry, you would preferably want to be above the VWAP, which is the green line. If price is above the green line, you want to be long or buying calls for options or whatever. And if you're below the VWAP, your bias should be bearish, which means you want to be entering short or buying puts, or just not entering at all, waiting for a long opportunity. So anyway, here's an example from Friday. I entered on this candle right here. Well, this one. And it was pre-market, and we had data coming out. Oh wait, data's, never mind, forget the data part. So we got a close above my line, so I entered long. I bought 2 contracts of NQ futures, and this big red, these big candles right here are the open right at 9:30. It's usually pretty volatile, so I did not exit on those. And if you're a beginner trader, I recommend not even trading like pre-market or whatever. Wait till after all the open volatility chills out and stuff. So I didn't exit here because of the open. I wanted to see where it settled out at. And as you can see, it went up. And I was in. And right here we get a close below the 9 EMA, which is where I should have exited, because we had economic data at 10 a.m. We had consumer sentiment on Friday. So I didn't sell when I should have. But as soon as this 10 o'clock data hit and this big red candle started forming, I just exited. I just did a market order, get out. And I'm glad I did, because we went down for quite a while after that. But if I would have got out here, I would have had much more profit because my exit was actually way down here in this wick, because this candle moves so fast. So I lost some gains because I should have got out where I said I should have. And then next, later on in the day, we got another close above, but as you can see, we're below the VWAP. This is an example of what not to do. I'm not sure why I did it. I wasn't paying close enough attention or whatever. And a lot of times this VWAP can be a magnet. So I think what I was thinking is we're going to at least go up to VWAP and then possibly either reject or break above it. But anyway, I entered it here. And then as you can see, we started going sideways and we went back below the moving averages, and as soon as these big red candles hit, I just said, I'm just going to get out. So I took a loss on that one. I basically, over these two trades, the morning trade and this afternoon or this late morning trade, I actually lost about $50, so it wasn't too bad. And I could have held this trade because later in the day we actually went up and I could have exited for profit, but I didn't trade anymore because the day, look how it went up. It went up. But basically most of the day we just chopped around. And I also wanted to show you that on this strategy kind of works on pretty much any time frame. Excuse me. This is an example of, this is gold futures. This is a 15-minute time chart. And if you look here, we closed above my lines. And here, this was a, not sure what that candle was exactly or what that caused that volatility. The best entry would have been probably either this white candle here or this one here. But anyway, as you can see, this is like May the 9th at like 9 a.m. And this thing kept going up and up and up and up and up and up, and we didn't get a close below this 9 EMA until the next day pre-market, or even if you wanted to wait till it closed below the 20, it's still pre-market the next day, and that's a really nice gain. I mean, you can even take this up to like a daily chart. I mean, you could have rode gold up from like March the 28th, or no, wait, February 28th to April 24th. I mean, that's what, a couple of months of gains you could have made if you like to swing trade. Anyway, I just wanted to share that quick, easy strategy with you guys. And you can see here, it doesn't really work in a choppy market. But the thing about it is, even if you were to go long because it closed above your lines, normally if you get out on your exit symbol or your exit signal, you're going to take either a small gain or a very small loss. So even in a choppy market, at least you're not going to lose a bunch of money. So that's about it. I'll catch you later. Thanks for watching.